So I know you're looking beyond the UK for new expansion opportunities and new markets, but let me get your views on the broader macroeconomic outlook. How do you rate the consumer, both in the UK and elsewhere, given that the same themes of rising costs of living, rate pressures are really paramount?
Yeah, good morning. I think it's a really interesting development. We've gone through a period of significant instability, which was more political and market sensitivity, but coming through that to this point, banks are extremely well capitalized, so that's the first thing to say. Secondly, unemployment is at an all-time historic low. So those are underpinning the transition through the recessionary period. And what you will see is some pain for consumers, but in the UK, the largest asset class is mortgages, and that's 75% of the UK is fixed. So the interest rates are less significant in terms of the debt for a customer. But the inflation levels on consumer goods and on energy are a concern. But then again, many of the subsidies are being put in place by the government to help with that. So I think there's a sense that as you look at the broad UK economy, it may be a recession, but it may be shallow or less severe than was originally envisaged during a period of instability.
The broader regulatory push on ring fencing, your type of business look to be a beneficiary of that. What kind of changes are you expecting?
Well, I think it provides more flexibility in the market on the deployment of your capital. So I think the UK government is looking to make it a more competitive financial services universe, and I think that's helpful. And as you look at us, we're I suppose people call us a disruptor. So we're a bank that wants to disrupt the status quo. That is our strategy, and we're growing quite strongly. We're out here showing our results to our Australian investors. And for us, anything that facilitates the market so that we can deliver a real growth in our overall size of the bank. We're the 6th largest bank in the UK now. But we want to continue growing, and we want to add our products and digital services worldwide to the Virgin Group, because the Virgin Group has 47 million customers worldwide. So anything that allows us in the UK operate more flexibly with our capital is a real positive.
Have you had those conversations with the government so far?
Well, I think we've had a long and ongoing conversation with the government with regards to COVID and everything that's happened since then. But looking at the competitive nature of the markets and looking at regulation, we're in constant dialogue. So I think the key thing to think about is the UK government post-Brexit is looking at how it wants to optimise its operating model, its digital go-to sort of reputation as a financial centre, and also the regulations.
And you're in Australia right now because you have a large shareholder base there too, right? What does the Australian public need to know about your strategy going forward?
Well, I think, thank you, yes, we have 52% of our total shareholder base is Australian, and that's why we're here. We're spending the whole week here meeting our shareholders. I think what they need to know, and what we've been trying to tell everybody this week, is that, one, we've just done a year's results, and they have been really strong, really good performance, 10% ROTE, guiding, importantly, to the future. Even though there is a recession, we're saying that we will improve that to 11%. And then, very importantly for shareholders on the ground here, we've talked about a 10p dividend and a buyback, which is very significant. If you look to the future, we're saying, think of the next 2 years as a shareholder in Australia as one where we will grow our profitability and increase our dividends and increase our buyback. So this is a bank that is very competitive, is growing very well, is disrupting the status quo in the UK, has a load of potential optional growth in the future, has to manage a recession, but we're confident about how we get through that. But it's about dividends and payments to our shareholders, and we're signalling that they will be significant in the next few years.
Digital is, of course, core to the strategy, including a new buy now, pay later. I mean, that space has been fiercely competitive. Some would say overbaked over the past year or so. So what's the differential here?
Yeah, we've built a product called Slice. So it's Virgin Slice. It's a buy now, pay better product, we call it almost, because we were very cognizant of what was wrong with the model, where you can have no credit checks coming in or very little credit checks. People don't understand the leverage or the amount of borrowing they were incurring. So we built a product with Gen Z which says it will be credit scored. So when you get this product, which allows you flexibility in making your payments, it's credit scored, and you're also able to, using an installment model, build your credit score. So a lot of first-time entrants into this market, Heidi, don't have the ability to get credit, and if they do, they try to go via a payments or a buy now, pay later model to get it. We're saying, no, come this way, you will get a good credit score at the end of it, and you will have access to credit through this product.
We were just observing Sam Bankman-Fried's commentary earlier, and you were saying, you know, Virgin Money, you deal with real money, right? When you take a look at what's going on within crypto, do you foresee a time where that does become mainstream still, that you would want to have exposure for the consumer to it?
You know, I've been looking at it like everybody else, and you marvel at the situation. But I think the reality is that the digital future, dare I say metaverse, but in the future you will see central bank digital currencies, you will see net settlement by an individual with a unique ID on the internet, and you will deal with cryptocurrencies of some type. I think in the evolution as it gets built as an architecture, you do have some unusual events and some circumstances that cause concern, but I think if you look on a 10-year horizon, there's no doubt that cryptocurrencies will be a part of the daily financial mechanism.